That's good. I'm around 5.34.
Hello, Warriors. Here's someone in the background. How are you? So let's have the good day pre-holiday session, Independence Day tomorrow in the U.S. And, sometimes we make it too important to be independent. We're supposed to be strong individuals, independent, but there's nothing wrong with counting on others and cooperating, collaborating, even being dependent upon a community, which is what you could be with our community here. When I was younger and more immature, early in my career, the only reason I would follow others and check out their stuff was so I could fade them. And it took years later to understand that you could cooperate with talented people and it will give you more of an edge that than you can develop on your own independently. So with that all being said, don't make too big of a deal about being so independent because um, other eyeballs and people who support you and build you up are just as important as you being an individual. Everyone with me? How you doing today, Simon? AJ? Hi, Sinatra. Kman, how are you? George, James, AJ. Here we go. Here's some people that are dependent upon F.A.C.E. They come here every day. Laura. So you may be independent, but you're part of something bigger than yourself. Hi, Paul. Richard. Okay. Simon, thumbs up. So, team,
Good
see
morning, Dale.
who's. Hey, how are you? Kay?
Very good.
Good. Did you like my speech?
Extremely, I liked it extremely, Dale. I mean,
No.
it's always you always talk the right and speak the right words. You know that.
Well, I just try and share what I've learned, and yeah, my hope is it doesn't take others as long to learn as I did.
Hmm.
Pretty stubborn guy, and I had to learn to be flexible by getting kicked in the teeth.
Hmm.
So, it comes with time. Everything, the markets, everything, the tincture of time works things out one way or another. So, I want to start off with Canada.
Mm-hmm.
So, I've been bearish for a while, Kay, and, I'm looking for this 136 descending triangle eventually to be taken out,
Hmm.
and you also have a 200-day moving average here. So this is, I could draw it out. It's a descending triangle. And, once we take it out, and I'm talking like it's a done deal, it's not a done deal, especially with the NFP tomorrow, right?
Yeah, the day after tomorrow. Yeah.
Oh, yeah, that's
It's a
right.
heavy jobs week. This right. We have ADP in 10 minutes. Then we have the claims. Then we have. And I would argue ISM is perhaps even more important, looking at the employment index, the price index coming up in a couple of hours, and then before your day off, and we will have the NFPs on Friday then, yeah.
Okay. So, yesterday the dollar was pretty much unchanged, right? Didn't do much. Um, this was a candle, kind of a negative candle, and perhaps we're finally starting to roll over. I need closes under 105 to,
Mm-hmm.
even though I stepped back in Monday morning in here
Yeah.
to reestablish because I didn't want to be, short the dollar into the elections. Maybe this time I'll stay and there'll be bigger impact. But yesterday, the dollar was down 10. Canada was down over 50. Okay,
Mm-hmm.
so displaying a lot of relative weakness. So if the dollar is turning here, I have a lot of confidence. I've always been well, in this turn, been more partial to commodity currencies than the others. I mean, they haven't been able to take Aussie down at all.
No.
And Euro's been kind of the weak, not kind of the weak sister, but this it pulled back, filled the gap, but it looks okay. And if I feel that way, a little cautious about the second round of elections in France, I'm sure the whole market does, just like I did last weekend. So really, the pain trade is probably to go into this weekend long. We'll see after tomorrow.
Or
But I want to tip my hat to you. I thought that maybe we are going to finally get some type of rollover in the
mm,
gold came in, and
yeah.
huge day in the metals, huge day in the gold silver ratio. If this isn't a flag, I've never seen one, and been talking about it for a while. You have a confirmed low here, and we're headed back towards these lows.
Yeah, I
Getting it
think
back.
they're telling us something about the market more than probably currencies right now. Although we've seen a couple of currencies strengthen versus the dollar as well. I think the metals are showing us, and that's kind of, I've been saying it a couple of times, kind of the feeling that I had. It's not going to take big misses on those numbers to get those metals higher, in my opinion. There's a couple of things ongoing that are telling me those things are not really willing to go down. There were enough reasons to get back below 2300, below 29 and hold there. There were a couple of reasons, and they don't. So um, it all
Yeah,
will depend on the data, obviously. And
yeah,
now we've had most of the European data, we've had most of the other data. Now it's purely today and into Friday about the dollar, in my opinion. And
right.
it's not going to take too much of bad numbers to get those really starting to take off, in my opinion. But we will see the data, of course. But they are showing us that what the market is probably looking at. And I also think after Powell yesterday, that the metals started, they took a while, but then started to slowly tick up after Powell, because he sent us really again to the second part of their mandate, which is the employment. And now we are in an employment data situation. Yeah. So
Yeah,
and yeah, of course, I mean, we've had this before other US data, that the market tends to lean a bit towards a weaker dollar, and then is forced to buy back. We've had it after prior NFP reports as well. But it looks to me like the metals, yeah, they are showing us that
yeah.
about the temperature a bit of the market right now,
Well,
more
you
than the
know
currencies.
what's my favorite formation, Kay?
Yours,
Yeah,
the
when
drives,
things happen in
The 12
threes,
drives.
the
the
drives,
million drives still.
the
Okay,
million.
Morning.
at
Still.
least exaggerate. So I mean, you've only had two in silver.
Mm,
So and what? And the other thing that I count on is RSI. And at the last high, we did confirm, right? We made a new high, and RSI took out these highs, so it confirmed the move.
yeah.
And that's markets normally, or usually, not always, don't top when price and momentum is confirming price. So we'll see what happens.
Mm.
Maybe we get that third drive. Maybe silver makes a new high without gold in this
So
circumstance.
to come back on this, because it's not something that I watch, but I know that you do. You are looking at the gold silver ratio to find to monitor the direction of the dollar as well, right? If the gold
Yes,
silver ratio goes down, that means that the dollar is offered.
sometimes,
Mm,
it's a decent correlation, but like
mm,
all of them disconnect. I mean, part of my reason for my highest conviction trade is in Canada is the bullish
yeah,
nature so far of the move in WTI.
mm,
But they disconnect. Maybe they'll reconnect. But Canada's my highest conviction trade. I
yeah,
really, you know, unless we break out of this triangle. Just one more thing I came up with, and I want to get everyone else's views. So, you know, Friday threw off my view of lower yields. You know, it ruined all this structure that we had here in bonds. But you see this wedge that we broke out of here, and we had a test during the failed auctions before we rallied to 94. And this wedge line will get tested just a little bit under 89. So, you know, if you're a bond bull, this is make it or break it. It's got to hold in here. So it might be a decent long entry with fail-safe stops, say, you know, 87-ish. That just something I saw that I'm paying attention to now. I mean, after this, I turned neutral, but then I did some work and
look,
go ahead.
look where that sell-off came and when.
Yeah.
The timing. It's after the Trump-Biden debate into end of month, end of quarter, and then those a bit of fear about higher yields and stuff. But now we are, in my opinion, now we are going to trade jobs, and it can all be thrown around again. Of course, we need to look at the levels that US 10s capped around 450, 52. There's a level. We are now in the 440s. It's not going to take too much to break it higher, to break this one higher, because if we get stubbornly good reports, that could obviously break, because then the market will say like, oh, you see, I mean, there's nothing wrong with the US jobs market. Now we are trading back what we were trading Friday and Monday and Tuesday. But I'm not I'm not convinced that we can go too much higher now that we've traded this wave. So this really now is the data are going to tell me. And again, if we get like small downward surprises in the job market, I think this picture can turn around and yields to come off, you know.
Yeah, well, I mean, again, you know, I've noticed over the years that when you spot a formation, like I was talking about the Canadian descending triangle, flat bottom, descending line, that you really have the same thing in the 10-year. A little smaller, but here's your flat line at 420, your descending line. And, you know, we'd be set up for sharply lower rates under 420. So, you know, you could take a shot here and, you know, risk, you know, 20 bips or so, get out if we break out over this line. It comes in at 454-ish. And if this happens, you know, I think that would be part of, I know rates are relative, part of the bearish narrative in the dollar. So,
I think Stel will have something to say about the yields. And
I agree.
And by the way, let's Stel, just before I give, I hand it over to you. ADP in 1 minute, okay?
In 1 minute, yeah.
Not your huge, it's not your biggest mover or driver, but the algos will stick their teeth in anything right now.
Yeah.
All right, anyone want? Let's see if I could do it.
By the way, I agree with what you said about yields, Kay. I think I've said it for a while. I think this consolidation will most likely resolve to the downside. Of course, we could take out that resistance, as markets do try to find stops everywhere, but I think the resolution is going to be to the downside. So I think we're going to be heading for lower yields, at least for the rest of the year. After that, of course, no one can foresee what's going to happen. And I'm not saying I don't think inflation is going to come back down below 2% to stay there, but I think the central banks are going to be a lot more lenient with it. And Jay Powell said so last night, right? He said that they're seeing significant progress and they're happy with the progress. So 2%, so 2.6%, they're happy with that. So I think they're
the job market.
Yes. Okay. 10 seconds. Let's have a look at that.
I have it up on the screen for everybody.
You do great. Let's see.
Tell me that was a major accomplishment for me.
150.
Okay, a little softer.
Revision marginally higher. So net, I don't think it's a huge deal either way. We're obviously waiting for payrolls on Friday. Tomorrow's the holiday, in case people have forgotten. Let me take the screen for a few
Yeah,
minutes.
go ahead, buddy.
Who else is here? I see Steve is probably not going to be here. So
Yeah,
it's
let
us.
Mr. Confirmation say hello.
Sorry, say again.
Let Mr. Confirmation say hello. He knows who that is.
I don't know if he's going to be here. Hold
Steve,
on.
please.
Share screen, desktop one. There we go. So we are. What's the market doing on the back of this? Well, not that much.
Nothing.
So we are consolidating in the yields. We talked about this. Kay mentioned it. You mentioned it, Dale. Could we edge towards 455? Of course, we could. Could even break out higher, but I think this will resolve to the downside. And this is because I think the Fed will be dovish and they will continue to be dovish. And I think they will cut rates, even though they really shouldn't with inflation up here. We've said it a million times. They want to be cutting. They want to be as dovish as they can because, let's face it, it helps markets. It helps equities. It helps the housing market. It helps everything. So the only problem is that it stokes inflation higher. So the risk is for them cutting rates is that they're going to be risking raising inflation as they do so. Now, having said all that, of course, inflation is really raised by spending more than you earn as a country, and therefore increasing money and credit supply. That's a different story. Anyway, going back to the markets that we have.
Yeah.
Sorry, what were you going to say?
Well, I'm just thinking, with the way things are going politically here in the U.S. and the fact that former President Trump threatened to fire Powell when he was in office, and now with his huge commanding lead in the polls, that perhaps Jerome Powell may do what's right for the economy instead of what's right to keep things, really, even goosing it into the election, because this may be his, his job may be coming to an end as Fed chairman if Trump is elected. So, he's going to be thinking more about legacy more than ever than just trying to keep the job and cooperate, even though they're independent, the day before Independence Day, they're supposedly independent, but they're dependent upon whoever is in the Oval Office. Okay.
Yeah, that's a good point.
So, I'd put myself in his shoes.
Yeah.
If you knew in 6 months your job was gone, you might have different attitudes about what you're going to do during that remaining time. What do you think about that, Kay?
I'm sorry, I was just updating. Come again.
Oh, okay. Well, then I can't repeat it.
I can comment. This reminds me of Jean-Claude Trichet, who hiked right before he left, remember? And then months later, the ECB had to unwind those hikes. But I agree with you. There is certainly a political aspect to it, and elections are coming. So, but to look at the two alternatives, so Joe Biden or Donald Trump, in terms of fiscal policy, well, Bidenomics is basically spend, and Trump is not really much different, right?
They say he's worse. Summers.
Yeah. Go on. Sorry.
Yeah, it may be the same. It's spending wise. I think it's going to be in perhaps sectors will be different, but spending wise is going to be the same program. And it's a bit what we are seeing in the UK as well. Left or right, same program. I think, and I'm just going to repeat. I think the Fed is closer to cutting than what the market thinks, and the dots showed a distorted picture, just as a spot picture. At that time, that was what the dots were showing. I think Powell for one yesterday was giving a little bit more leeway to the leash than what the FOMC did. He was clearly talking about. He even spoke about the housing market, spoke about the jobs market, and I think the focus may be just shifting a bit from inflation spikes here and there or a bit lower, okay, but to me the focus is shifting a bit for the second half of the year, and it's not going to take too bad or it's just going to take a slowdown of the jobs market will to me at least be already enough for them to cut. I'm not ruling September out at all.
I am with you 100%. I think inflation-wise, they consider they've reached a target or close to, and it's really the job market that's the main worry. Yeah. So markets, the S&P is just climbing toward new highs, and for people who have been in the chat room, I've been talking about 5,500 for quite a while, and we're there. But the problem is, you know, the shorts get burnt every time and every dip gets bought. So what happens from here? You know, if you look at the big picture, we're just heading toward new highs, and there's absolutely no technical evidence whatsoever that we are anywhere near a reversal. And so I would be very cautious in shorting this market because it looks like we have a little bit more to go. And let's remember, whenever a rate cutting cycle starts, this is always good for markets. But then, of course, we see reversals because, let's face it, when rate cuts come, it means that something's bad with the economy. So initially, it's good because the markets say, "Oh, okay, great, low rates, more leverage, cheaper money, etc. The QE may be coming, etc." But then they realize that there's going to be layoffs and that markets, the economy is actually not doing that well. And actually, while we're here, check this out. I think I've shown this before. So this is the S&P monthly chart, goes back a long way.
Yeah.
Look at this correlation. Well, what do you know? Right? So pretty much everything is correlated to money supply in the end, right? At the end of the day, you can't trade off this, of course. But as long as deficits are there, I have really, really no desire to be short markets for any, you know, prolonged period of time. Let's put it that way.
Well, you know, Stel, people are talking like Saloom, one of our attendees brings up 6,000. If you put up your first S&P chart with the 4,800 level on it, that was a breakout from the prior high. And the range going into the breakout was, I don't know, let's call it 3,450, 1,300 points or so. Tack on 13 to the breakout, and that's how people have been coming up with 6,100 or so.
Yeah, makes sense. Makes absolute sense. We've said for a while, I think the problem for markets would have been high yields for really a long time. I mean, they were hiked fast, and you know, we've had high yields for now over a year and a half, almost 2 years. This is the main problem. If yields are dropping again, I mean, I think dips are going to get bought again and again and again with a vengeance. So I wouldn't short these markets. I really wouldn't. You talked about, sorry, go on. You were going to say something.
I would put just one condition to it, and that is give us a slow down, not a collapse of the market, of the economy, right? So this thing is going to work a treat and will still work a treat, especially if they start to hint at a potential rate cut. This will work a treat if the situation, the economic situation, just goes like slowly, a slowdown instead of a turnaround, right? That's going to work really a treat, I think, for the equity market still. And same thing for your metals are probably going to enjoy it too.
Well, we've seen that in
all one market. Everything going up together, no differentiation.
We have seen that in times of crisis, everything gets sold except treasuries, except bonds. So, Kay, you're right. If we get some kind of a crisis, then, you know, in the short term, everything's going to get sold, I think. So gold is still trading sideways after this big push. And this is, I mean, anyway, you look at this technically, it's bullish. Of course, if we trade below 22.75, let's call it, that changes everything. But for now, this is a very bullish consolidation. And frankly, on a fundamental basis, I see no reason to be anything other than bullish on this. And I've said it for a while. Silver is trying to break out of this flag, whatever you want to call it. We still have the big level, which is around 32.5, really to clear to say that we are now heading for much higher levels, because after that, there really is, the next levels are the previous highs, which is 35 up here, and then we go towards 50. But, one step at a time. We seem to
This is
be, yep,
this is one metal where Roaring Kitty didn't have everything to say, because first time up at 30, it was like a big sell because that was his call. But now
yeah.
we see that this market can go further on its own. Again, I think it will depend, and I've said it already a few times on the flow show as well, it will depend the speed of a potential slowdown and slowdown in the yields as well. If it comes with a gentle slowdown, I think silver can outperform gold. But if it comes with a really bad turn in the economy, gold will likely, in my opinion anyway, likely outperform silver by a big way.
I think that's true, and that's what we've seen in the past. Yeah.
Stel, you brought up Bitcoin for a minute. It's been under pressure for over a month. I have that same line down there around 54, 52. But, if Bitcoin is the measure of liquidity in the markets, that has to throw a little caution on just being wildly bullish everything. If you believe that it's a measure of liquidity, it's showing that, maybe it's not as, the conditions aren't as friendly.
Yeah, it's lost its correlation with risk, that's for sure. So we have equities kind of grinding higher and Bitcoin has been going lower. But having said that, I mean, it outperformed in a huge way for a long time. So a correction makes sense. The problem is that you get close to technical levels, which are important. Like we are here around the 23.6 retracement of that big move higher. And also we have the 200 DMA coming up. It's looking a little bit scary if you're long Bitcoin, but we haven't broken yet below. So, we could easily bounce. Ethereum is different. Ethereum is in the middle of the range. So that's looking less scary. Yeah, looking less scary, but cryptos have been battered for a few days now, a few sessions. But again, Bitcoin has gone up 100% within a few months, 6 months. So not too shabby. Euro pound, we've talked about this before. I like this short below 85. It's a very clear level.
Yeah.
And I think Kay or Ryan, one of those two have been short, or are shorting this, which I think is the right thing to do.
It's a pattern in play too.
A pattern in play. Okay, there you go. Very nice. Look at how many bottoms we had here. 1, 2, 3, 4, 5, 6, and now we're retesting and we're rejecting. I mean, this is textbook. And the other one I really like, and I've said it before, dollar MEX to the short side, as long as it remains below the zone, 18, let's call it 19 as a nice round number. Short this gives you about 6% carry, which is nice. And if you also consider that the dollar has been doing very well against most currencies, and at some point it's gonna have to have a move lower, and I think this Dixie chart will most likely resolve to the downside, even though I don't really like the euro, which is 50% of this index. I think the dollar is gonna have a top at some point, and if that happens, then dollar MEX definitely moves lower and might even try to take out these lows down here. But a couple of things I'm looking at, and do we have a guest today?
Yes, Larry Tentarelli, and he's in the
house. I like Larry. Good.
Okay. Blue chip daily, not poker chip.
Can I just
blue chip.
Before we close, because Tony was asking a question there, how long does the positive market sentiment last after the first rate cut is announced? I think, Tony, it is as we have been saying. It depends on the speed of a slowdown, which would cause the rate cut in this case. And the problem is, if they would have to go, or if they would go in September or not, then we run into the elections, and there it could become an absolute gigantic mess, really. So, but assuming
if we have elections.
Oh, we have data as well. Hold on.
Sorry.
We have data. We have jobless claims.
Claims,
A little bit worse. Who
slightly
cares?
higher. Nothing that's going to change the face of the world.
Yeah.
Now, it all depends on the speed of a slowdown, Tony, right? That's about how the market will judge positive or negative sentiment, right? And I give it back to you. Have a good day, guys.
Everyone's taking for granted there will be an election. So I'm just putting it out there. All right. I'm just putting it out there. Anyway, team, great job. Thank you so much, Stel, Kay.
Thank you, Dale.
I think that we,
Thank you,
kind
Dale.
of gave some great ideas. Short Canada on any rip. And Larry Tentarelli, Blue Chip Daily. Always great to have you, Larry, and to be able to talk to you. Welcome back to F.A.C.E.
Dale, good morning.
Good morning, partner. So let me open it with this. I know that you're very disciplined. A lot of things are above the moving average. My question to you is, with the concentration of the market being so narrow, are you finding it more difficult to find long candidates in this environment? Or are there just as many as there have been over the past year or so?
No, a little bit more difficult. So some of the sectors like industrials have been a little bit weaker. Materials have been a little bit weaker. So yeah, I've got slightly more cash, not too much. I'm about 12% cash. I try to stay under 5%. But some of the industrial stocks have been rolling over a little bit. The banks just picked up, but yeah, it's a little bit more narrow. So I'm pretty much concentrated in tech right now, in the S&P 500.
Okay. There was a note, I think it was out of Goldman, that TMT, which is what? It's telecommunications.
Yeah, tech, media, and telecom, I think.
Oh, yeah, largest amount of selling in June on record. I'm not sure if it was hedge funds, institutions, but that was their comment, and it's on record. So it's not just, something that happens every year.
Yeah, I'll tell you that the odd thing about that, though, is because I saw the same graph, and I think it also showed that November of 23, January of 24, and April of 24 were also really big spikes in selling by hedge funds, and those were all at the lows. So I think that, it's almost, you got to look at it a little bit of a contrarian indicator when you look at that graph and it shows that their major selling was right before, tech turned up every time.
Okay. So why don't you tell us what you're looking at, what you're doing?
Yeah, and then I'll let you, you do a great job of calling out the chart, so I can dial up, whatever you call out. But really, just the key thing to start with the indices, triple Q and the S&P 500, and I get it that the S&P 500 is concentrated in the bigger tech names, but I mean that's really what's been working for a while. They're in big uptrends, and the key thing is these charts have recent weekly base breakouts. So I mean these are coming out of pretty constructive weekly base breakouts. The uptrends are intact. I'm long. I think they go higher. We're in a seasonally pretty strong period. So this is triple Q seasonality. This is stockcharts.com. You can see my screen, right?
Yes, got it. So
yeah, their max look. Yeah, their max look back period is 20 years. So that's as far as they go back. And 20 years is pretty relevant. But July over the past 20 years, it's been up 90% of the time. Average return is 3.9%. So here's the thing, seasonality, it's never, ever a guarantee. Each market is unique. We've got unique circumstances. But, just from a seasonal point of view, we're going into a pretty strong month. Also, election years tend to be seasonally bullish. And people will bring up, well, what happened in the year 2000? There's always outliers. But if we look at 96 years worth of data, it says that election years, the second half is generally pretty strong. So what I see is charts are in uptrends. They're not, grossly extended or anything like that. They're really coming out of base breakouts. But there's other groups besides tech. The banks look pretty good. Bank of America is breaking out. JP Morgan's breaking out. JP Morgan's a super important stock. So is Bank of America. So when we see these big banks breaking out, that's not a bad thing. I will say the industrial.
They look so much better. They look so much better than the XLF.
Yeah.
Put up the XLF. It can't even get back to 42 yet. Okay?
Yeah,
So,
I don't really like the XLF. It's got, Berkshire is the biggest position.
Oh, then maybe that's the reason.
Yeah, and Berkshire's not bad, but it's a little bit flat. It's got the credit card companies. They've been a little bit weak. That Visa chart.
Yeah.
I got to tell you, I do hold some ETF positions, but XLF. If I was looking at the banks, I would just stick with the big banks. JP Morgan, Goldman Sachs has a pretty good chart. That's in the upper right-hand corner. Now, the key thing, and that's just under new highs, they've all have earnings next week, but the banks are showing some strength. Energy's been picking up a little bit.
Would you buy this break in NVIDIA?
Yeah, so I've got, I've been holding NVIDIA for a while. I could add to it, but I'm just waiting. So right now, for me, it did get extended up here. It was over 80 daily RSI. So I
make
did
anything out of that key reversal after a parabolic move.
No, I really don't. When I look at the chart overall, it just had a really big breakout, but it ran 80%. But no, I think this is going to turn out to be probably a consolidation like what we had March through May. And keep in mind, last year it consolidated for about 6 months.
Yeah.
Last year, June to November, it didn't do anything. But no, I do not think this is a blow off top, parabolic top. If you look at the weekly RSI, it was in the 80s, right? Back in March. It pulled back maybe 20%. Now, I think I'm holding NVIDIA.
Look at where the RSI is now if you go back to that one.
The weekly?
I call that a momentum divergence up there.
Yeah,
so
it
RSI,
might...
anyway, that's the way I see it. I would have rather had it taken out 80 at the last high to confirm the high rather than not confirm the high with momentum.
Yeah, I think my call for the past couple of weeks has been, I think it could trade down to maybe 100 to 110.
Okay, yeah.
That would make sense to me. But no, I think that when we, if we circle back up in 6 months, I think NVIDIA's got new highs in 6 months.
Okay. All right, so Larry, I want to ask you something. I brought it up to a lot of my guests. So
yeah,
my sister would be like, maybe someone that would subscribe to a service, but she doesn't even do that. She has a fiduciary. All right.
Right.
So she said, Dale, I'm going to get out of my positions in October. I'm going to get out of the market in October, and I'm going to get back in after the election. Can it be that, Pat?
Anything, yeah, man, anything
okay.
with this election, anything could happen. But I've got to say that, for the people that I know, and unless you're just a day trader or a swing trader, but if somebody is, let's say, in their 401k or something like that, it's just a coin toss. Maybe they get out of everything. And maybe, the election, things get a little...
Yeah, my point is that's John Q. Public. Okay, so if my sister is saying and thinking that, she's not the only one.
Yeah, sure.
So my point is, can we have clear sailing through the end of October, and then people get out, and then we have a sell-off, and then they'll be able to buy a nice dip? Is it possible, Larry? And I know I could see how we could get to 6K on the S&Ps. That's a measured move. from the breakout at 4,800.
Yeah.
But isn't it possible that there's some kind of surprise prior, maybe this summer, before the election, that there's pressure put on longs because they're worried about something domestically, politically? Maybe it's maybe jobs. We start getting weakness in jobs, and
Oh
the
yeah,
Fed,
absolutely. I would, if there was a 10% pullback in the index anytime between now and the end of the year or something like that, it wouldn't
You would love
surprise me at all.
okay.
You know,
would like that.
yeah, on average, the S&P has a 10% pullback about once a year. We've been in a pretty low volatility uptrend. You know, but so could it pull back anytime? You know, something weird could happen with the election process. You know, we've been in an uptrend for a while, but I do think that if there is any, 5%, 10% pullback, whatever it is, I do think that that's going to turn out to be viable. But that's based on what we know right now. You know, things can change a lot. But my view is that I think we're going to work higher over time unless there's a recession that comes out of somewhere. But my base view is we're in an uptrend and I expect it to work higher.
Okay. Doing anything with energy's been a star. I'm sure you're in some oil issues.
I'm actually not. I was in XLE, and I've gotten energy wrong pretty much for the past 6 months or so. Maybe a little bit longer. I bought it on the way up. I closed it out on the pullback. I haven't done too well with energy over the past 6 to 8 months, but there's a couple charts I like better than XLE. So WMB is a really good chart.
Well,
if I was going to buy energy tomorrow, I would look at F.A.C.E.
Looks great. Yeah.
Great chart. This right now, as of today, this is probably my favorite chart in the energy sector. So I look at it, but XLE I think is a lot like XLF. I think you can do better.
Too many dogs.
Yeah. There's a lot of stuff. So what I like to do, I like to focus on those high relative strength stocks. So I think F.A.C.E. is set up pretty well.
Okay, yeah, that looks good. Anything in the miners? They've been kind of quiet, pulling back. They're going to have a big update today.
Yeah, I think, I've been holding the copper miner. So I bought it somewhere in here and I rode it up there and I held it down here, but I'm still holding this. And the momentum right now, when you look at the copper miners, the daily moving averages look ready to cross higher. So, copper, this group is a lot like the energy group, but these charts are still they're in uptrends. I'm long. Silver held over the 50-day right here, SLV.
Yeah, it looks great.
So, this is a choppy group, but I am holding GLD and I'm holding copper miners, and I do think they're going to work higher. But just been a little bit choppy, but I like them.
Well, if the dollar is peaking here and this would be a failing rally, it can't hurt them.
Right. Yeah, exactly. And the dollar's been strong.
Yeah. So we'll see. It looks like a possibility of it rolling over. If you put a Dixie chart up there, it's a lower high.
Yeah.
Oh yeah, Microsoft. I don't like the divergence in Microsoft, Larry.
You see, so when you say divergence, are you talking about the RSI?
Yeah. Yeah. Look at we're under 70 with this move up here.
I think these are all, and everybody, a lot of ways to look at the market, but what I see on these charts, when you look at this weekly base breakout in Microsoft, you've got the same thing that's going on in Amazon right now. That's got a weekly base breakout. Apple has a weekly base. And I've got to tell you, Dale, when I look at these weekly charts, these are weekly base breakouts in some of the biggest companies in the world. Google's been really strong. And I just think these are going higher. You know, PE, forward PE for Google is 21. I think Microsoft is in the 30s. You know, there's a lot of talk, and you and I follow each other on Twitter. And there's been a lot of talk for the past 12 months that we're in another tech bubble, you know, but the fact of the matter is, and I've posted some you know, data on my Twitter page. People can find me at Blue Chip Daily. But something that I posted recently, it was from somebody at Bloomberg, and I'm just going to dig it up real quick. But basically what it shows is that if you look at, so here, this is from Bloomberg. So this is the S&P 500 tech sector, right?
Yeah.
Forward PE. So right now we're about 40, and 40 is not cheap, you know, but at the bubble,
where it was, there's no
at the bubble.
Yeah.
And hey, man, I was here, you know, I was long 120. And at the top in 2021, before we got that sell off, it was at 60. So, you know, when I look at these charts, you know, and I was there back here when Cisco was 100 times PE, and I think Oracle was 100 times PE. And when you look at these stocks like Microsoft at 34 times forward, you know, Micron Technologies, a big tech stock, 13 times forward earnings. I just don't see it, man. And I'll be the first one to tell you, I'm not a perma, you know me, I'm not a perma anything. I just stick with the charts. But they're, you know, when I look at these charts, Apple's what, 25 times forward? You know, these aren't, to me, these are not 30 times forward. They're not bubble valuations, and they're coming out of pretty long weekly base breakout. So I think it all works higher, you know, with normal pullbacks, 3%, 5% along the way.
All right, key thing that you said, breakouts. So what does that do for a trader? Now that you had these breakouts, you know one thing, you can stay long unless it negates this breakout, closes back in the Apple under 200, tell you there's something wrong. In Amazon, closes back under 191, negate the breakout. So you can let them run, but also be aware of when the picture would change. If you're trading a breakout, you don't stay long if the breakout is negated. Right, Larry?
Yeah, so, and it's all, you know, the key thing you make, that's a great point, but it's really based on the time frame. So if I'm, let's say, you know, trading on a weekly or a monthly chart, and I got a bigger time frame, I'm going to give a lot more wiggle room. So for me, this Amazon trend, I think this trend is good over 175. But yeah, for a day trader or a swing trader, you know, you want to keep tight stops. And, you know, if I'm a day trader or a swing trader, below 190, I'd close out the breakout trade.
Yeah, that's right. Okay, I mean, that's 5%. So, you know, that's enough room to give any trade, I think.
Yeah.
Don't you?
And you know, once again,
what's your average risk when you're entering? What do you base you know, what are you risking price wise when you get into a lot of trade? 5-10%?
My average stop on a position is about 10%.
Okay.
And I usually start in the 3 or 4% range. So but I don't want to risk on any new trade. I don't go over 50 basis points of equity risk. So that could be a 5% position and a 10% stop. It could be a 10% position and a 5% stop. But I generally give my positions about 10% to work with, just because, you know, it's not a shorter trade. I want to give it a little bit of wiggle room, but yeah, I don't like to start off behind the 8 ball, you know, at all.
Well, a trader friend of mine, Mike Venezia, was talking about stocks that had nuclear in their title last week they were all exploding like that, to the upside, like bombs. Do you know what I'm talking about?
I've been watching this group, and I've got a little bit of this GE Vernova that I got from the spinoff. But the nuclear group, it's been a little choppy over the past few weeks. They had big breakouts to start the year, but over the past, you know, 4 to 6 weeks, they've been pulling back. You know, Vistra, I think, is the biggest one. VST.
Okay.
I think they're the biggest independent nuclear provider. And then you've got NRG, which is NRG Energy. And they're just a little
Nothing.
toppy looking right now.
They must have been low floaters he was showing because they were exploding.
Oh yeah, might have been some of the smaller, you know, some of the smaller market cap. Yeah, this has been a really strong group, but it's just got some pullback to it right now. I don't know why, but it does. It's just something I'm keeping on watch.
Does this trade with uranium fairly closely? Is there there is a relationship between uranium and nuclear energy?
Oh yeah, because they use uranium is the fuel for nuclear. Right. Yeah, and I think that there is, and that's one of the tricks with these commodity trades like CCJ. I like CCJ. I don't have a position here, but I think that's the best way to play nuclear. The trick with these commodity, you know, they just tend to be a little bit more choppy based on, you know, the underlying physical.
Yeah.
And I do think commodities tend to chop more than they trend.
Okay. Well, Larry, anything you want to wrap it with? And I want people to know how to get a hold of you. They definitely should follow you on X.
Yeah. Best place to find me. It's at Blue Chip Daily. You can also find my website. That's bluechipdaily.com. We offer a 30-day free trial. So if you want to, you know, join for free, see what it's all about. I've got a daily Twitter page where I post trade alerts and things like that. But no, it's, you know, overall markets are trending up. I always expect that 3 to 5% pullback along the way, because that's just, you know, that's just what the averages are over the past 96 years. There's 3.5, 5% pullbacks per year in the S&P 500. I think we've only had maybe one over the past 6 months or so. So I always build into my expectations that we're going to get some pullbacks, but for my time frame, which really is more based on the weekly charts, we've got some pretty strong trends that are working higher.
Okay, Larry, great looks and, you know, a very constant and great temperament review of what you're doing and the risk. It's always great to have you come in here and edify us on different issues and your tactical style in the markets. Appreciate it and recommend people go check out your free trial.
Dale, I appreciate you. We've been doing this now for about maybe 4 or 5 years, man. You always ask great questions. You know, I appreciate it. I hope to see you back in 3 months, and I hope that you and all of your viewers that celebrate July 4th, I hope everyone has a great holiday and a great weekend.
Okay, well, yes, Independence Day. But like I was saying at the beginning of our show, nothing wrong with being dependent upon people that have skills to collaborate and cooperate with. And you're one of them, Larry. So thank you, my trading warrior brother. That's going to be a wrap for us. So follow Larry, check him out at Blue Chip Daily. And you're welcome. People are thanking us, Larry, and everyone.
Thank you. Thank you, everyone, for listening.
And Larry, be careful with your fireworks this year. Let's have
all our, you know it.
Let's have all our fingers for the Friday, so we could click the button on Friday live for the NFP. Be here, trade it with us, and don't just count your pips, count your blessings. Adios. Have a great holiday, everyone. Thanks again, Larry.